Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, May 30th, 2008. Well, as we get into today's video, folks, we're going to touch on the non-event of a day in the markets today, as the volume was probably just about the lightest of the year, if not the lightest of the year. It was an unbelievably quiet day, and we had mentioned that yesterday in the video, saying that look today for the shortened holiday week from Monday being off, especially on a Friday when it's beautiful out in New York. A lot of traders are heading to the Hamptons, heading to the Jersey Shore early, and they'll take off, and volume will be very, very light. So, in tune with that, volume was unbelievably light, as we saw the markets close mixed on the day. We saw the Dow down about 8 points, the Nasdaq up 14 points, and the S&P up 2 points. Now, the keys for today were the oil trade was non-existent, and again, after a large move in the markets, like we always talk about, we get that pause day. The same holds true in the oil markets. You saw a huge move down yesterday of about $4.50 in oil, and in tune with that today, we had an up day of about $1 in oil, where it get that little reflex bounce, a pause day, if you will. We see more downside in oil over the next month or two. In fact, I hate to go out on a limb like this, but it wouldn't shock me to see oil below 100 by the elections in November. So we'll have to keep track of that, but I do think that there is more downside in oil. You'll have support on oil at 120. Should that break, then 115 should be the next area of support. All right. Now, a few keys here on the market today. You guys know we're projecting a move down in the markets starting next week. Earlier in the week, more likely here, and we are looking for that. And in tune with that, we began to eye the QID and the SDS positions today, and look for entries on Monday. All right, so folks, so keep in mind that we are seeing this move down coming again, and there are some definite negatives out there, and I'm going to point them out in this market. There are signs out there. You know, we have our proprietary calculations and so forth, but there are certain stocks out there in certain sectors that are just not acting like they should. And that's almost just in itself a good indicator that not all of this is out of the way yet. So let's go into the ES, and then we'll get into that whole thing, because I really want to focus on that, because I can't. I look at some of these charts, and it's unbelievable that they're not getting better bounces, and they are actually just rolling over already, and the markets are still bouncing up on light volume. In any case, not a whole lot to say. This is the intraday ES chart. Gives us a good view of the intraday moves on the S&P overall and the markets, and you can see chop shop of a day and in a very, very tight range. I mean, this is the lightest volume probably of the year, if not, you know, close to it, and you had a very, very tight market today. No major moves. Everything stayed pretty much around the even mark of the markets. You had a little bit of an up move, a little down move, followed by up and down, and so forth. So let's get into the daily market, and then I want to just focus in on what we're talking about with some of these sectors that aren't performing and are actually dropping while the markets have bounced this week. Number one, looking at the ES chart here, notice how we've come up here. All right, you had the fall that we called for in the markets to the 20. We called the bounce this week. You got the move back to the 20 moving average here. All right, right here. And then now we're starting to believe that the market will have another downdraft, and possibly taking out that 50 and going, again, we mentioned points of support being right around here in the market and right around this area, somewhere in this area, good support. So again, well, first, number one, we want to see if it breaks the 50 moving average, which is right here, and if it takes that out, look for this area, somewhere in this area, to be the next area of solid support. Okay, now let's take a look at the SPY and just confirm that on that chart, which is the same thing, same chart. You can see the tail up top, the fall we had called for, the bounce right off the 50, right back to the 20 moving average here. And again, this is acting as resistance, plus you got a full week of bounce now in the markets, and it's a sizable bounce. Let's not push it aside. In all fairness, that was a nice little bounce that we called for, and it turned out to be a very nice bounce. Almost a whole week of bounces. You know, you basically had Tuesday, Wednesday, Thursday, and today, Friday, all pretty much up days or mixed. You know, pause days or up days. So 4 days of nice movement up gives the market a nice buoy, and it sets up for another possible fall. Look at the volume on the SPY today. It's like the midget candle here. It's a very tiny candle. Unbelievably tiny candle there, and just shows you the non-existent volume in this market. All right, now let's talk a little bit about what I was mentioning before, how there are certain sectors. And we've mentioned this, how we knew that the market was going to fall here. When the market was rallying here, we knew it was just a fake out before a hard fall, and that was the XLF. Now, the XLF, I pointed out the move up here. The SPY was like this, okay? and it went up like this, and then it fell. The XLF, which is the financials, a good barometer for the financials, never got that bounce up that the SPY gave. So let's look at that SPY again. Here's the bounce up we're talking about there, and going back to the XLF chart, this is all you got out of the XLF. Bear flag, in spirit of bear flag, told us a fall was coming. The fall happened, and you saw the XLF dump out. Well, again, the markets have gone like this, moving right up into that 20, and the XLF has pretty much been sideways action. In fact, again today down 32 cents. Something's wrong here, guys, and obviously we don't have the inside, we don't have any insider information, so we don't know exactly what's going on. But the financials are not acting healthy at all. So it's very key that these are watched. There seems to be something going on here with the financials. There could be some new thing. I don't dare say any type of Bear Stearns situation, but there could be. And I want to point out one stock, and this is a Swiss stock trading in the U.S. UBS. UBS. Now look at this. This thing just can't get a bid, and this is one of the major European banks. All right, and this is why it bothers me, is because not only you're getting away from the U.S. banks now, and you're talking about UBS, and this is very bothersome to me. Look at this chart. Does this chart look anything like any of the S&P charts or any of these others? Absolutely not. In fact, it hasn't got a bid. Here's the Bear Stearns news over here. It got a nice little buoy up, topped out there, and ever since, it's just been getting hammered every day, down another dollar today to $23.66. So, who knows, guys? I just point out stuff that we see here at InTheMoneyStocks.com that we find of interest, that gives us a little insight into the overall market, but this is not a good chart. This is a chart that is worrisome. If it were to break this double bottom down here, and we can extend that over, and it's getting in that general, somewhere around there. The double bottom's 21.13-ish, I believe, around $21. Actually, around 22. In fact, around 22. Should it break that area, and then I would be very, very concerned. And who knows? Maybe something is coming out on this, or maybe on one of these other financials. But it seems like the financials are having problems, and the market's not recognizing it. And without the financials participating on the way up, you have to assume that there's more downside in this market, as the financials are a key component to the upside. You also add in the price of gasoline, which is basically $4, actually around $4.20 here on Long Island, around New York City. That's a major issue for consumers. We got more consumer evidence today that the consumer views it as bad as it has been in about 25 years, and it's just not some pretty stuff. But in any case, the UBS here is the major concern to me. Something's going on here. This is just an ugly, ugly chart, and it needs to be watched. They may need an infusion. They may need to be bailed out. I don't know, but it's ugly. All right, guys, so keep that in mind. Some other charts to watch for next week. Baidu, B-I-D-U. All right, you had the M pattern top here. All right, you had the rollover, the pushback. Now you have resistance here. If the market does drop out like we believe it will, you should see this come down nicely, and we'll continue to watch for that. Also, look at the volume here, and this is such a great example. Look at the downslope in volume, and look at the upslope in price. That's a divergence that you want to pay attention to, as notice the volume on the downside. So a very light buying is bringing it up here, pretty dramatic jump, and watch for a possible move down should the market dump out next week like we believe it will. Alright, that's just another good indicator to watch, guys. Solar's bounced today. First Solar was down about $80 from the highs ever since oil topped out around $135. It rolled over hard, finally got a bounce today, was up about $15. But again, you want to watch for some sort of setup. If oil generally, if oil drops, alternate energy will drop as well, because the cheaper oil is, the more people will not switch to alternate energy because oil is so cheap. So should oil come down hard, watch for solars to lose some steam again and possibly come lower, and we'll have to see about that. Nonetheless, nice bounce today on FSLR, and all across the solar sector there were nice bounces. Other than that, that's about it. You had Google up about $3, Apple up about $2. Let's take a look at Apple's daily chart. Apple's an interesting chart pattern. I look at this as a bearish chart pattern on Apple, as you have a nice move up here, then you had the drop and a possible move back up. You got to watch for a double top in this area, or if it doesn't even reach that and you're just creating another drop pattern, you could have a new drop here. But again, we'll watch it. Apple does have that conference coming out where I believe they're going to unveil that new product or the upgrade of the product. So we got to keep that in mind, is that it's generally they'll have a run up into that and then it'll dump out on it. I don't even know if it has that much of a run up into it because it's come up so far so fast. A move of this unbelievable nature is an extension move, and you have to assume there is some downside, if not after that announcement, possibly even before. Alright guys, that's about it today. I encourage everyone to come join the chat room, the intraday stock chat. We also cover E-Minis. We basically dissect the markets minute by minute, giving you updates, giving you trades that we like out there, calling out support, resistance, talking about stochastics, divergences, you name it. It's talked about in that chat room. You can ask questions on any stock you want or any market you want. We'll answer them all as best we can. Also join the swing trade alerts, as we are in another trade that's in the money.